Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. So, unless you have been living under a rock for the past week, 2 weeks, you will know that the market has been very, very volatile. We called this out starting a couple of weeks ago when the market was looking so overextended on the RSI, looking back at previous patterns. Different technical analysis really gave us the hint and the better probability in predicting market direction that we were going to see this pullback. Now we're in a correction right now. How long will it last? Well, that's what we're going to, really dive into in this video. Now, when a market does pull back like this, we're still in a bull market. So while everything may seem very scary right now and very fearful, well, this is the time to start building those watch lists. Get those stocks that you have wanted for a long time, and start building the watch lists, because this is when you're going to want to buy when we start to show an uptrend is forming. Not yet, but we're going to keep an eye on it. In the meantime, just build those watch lists, and that's what this is going to be all about today in this video. We're going to go over the major indexes and where I see the market possibly going. So here we go. Before we get started, this is our Discord. It's literally one payment, $99, and you have full access. It's a really, really good group. The link will be in the description for you guys. One other thing I want to show you is this is going to be the earnings for the week. So we have, decent amount of earnings. We have GameStop here on Wednesday, ChargePoint, that's the battery EV charging company, Oracle here on Thursday. We have ASO, one of my favorite stocks of the year. Their earnings are on Friday. So, a couple of decent companies here having earnings, nothing really spectacular. Here we go with Bitcoin. Now, this is crazy. Bitcoin dropped from about 57,000. Now, this is where you can't listen to everyone, okay? There was so many gurus saying that the next bounce on Bitcoin was going to be 53,000. Well, 53,000 was basically non-existent. We had a tiny bounce here at 53,000. I mean, look at this tiny little bounce. And then an entire market sell-off. There was a lot of selling of huge blocks of Bitcoin, 4,000, 2,000 Bitcoins at a time were being sold. Big investors, big, companies, I don't know. But El Salvador went on Twitter and wrote that they bought the dip. If any of this is sounding to you guys like we may be in a bubble, when countries are buying the dip on Bitcoin, I really don't know what else to say about the market. Do I think we're in a little bit of a bubble? Yeah, probably. And we're going to look at Apple as a little bit of context here. This is pre-pandemic right here. Now, pre-pandemic, we were trading at about $77 to $80 a share. And then we saw, the drop, the crash in the market. From 80, we are now up to 160, hitting highs of 170 over here and getting rejected immediately. Okay? That is a history that we have seen with Apple. Now, Apple is a great company. It's a good company to, put some money in as a value type of thing. it will probably hold up better than the rest of stocks that aren't making any money, and everything else. The only thing is, I mean, look at how much Apple is up from just a couple of years ago. This market that we're in right now, and this is why I pulled this up as kind of context, because Apple is a legit company. Excellent, excellent company, great growth, really good earnings, really, really good. But look at where we're at. I mean, we are just to the moon with stocks. I mean, approaching $3 trillion market cap on Apple. I don't know. I really don't know how long these valuations are going to hold up. And you can see what happened in the past week or so. Yes, there was Omicron, there's some fundamental stuff going on, but you can see that portfolios are being rebalanced. A lot of those high growth, no earnings type of stocks are getting crushed because interest rates are going to be risen next year. Big managers of, portfolios, they're rotating out of those stocks that will not do well with interest rates going up and the Fed tapering even sooner than before. So, we just have to keep an eye on it. I'm going to go over the S&P 500 and what I see. Whoops. Okay, so this is the XLF. Here's the S&P 500. And I just want to go over some things that I see forming patterns, because that's the only way that we can really predict market direction, which is extremely hard to do. And it doesn't mean that it has to happen just because I'm showing some of this. This stuff that I'm using from the past to predict the future has worked all year long on the S&P 500. That's why I continue to use this type of pattern. So the S&P 500 all year long has bounced literally the next day or the same day off the 50. You can see here the entire, most of the year until we saw that correction that happened back in September. We started to get to the 50 right here, didn't break below it, and then gapped down big time below the 50. That was the first time that happened all year long. There was a lot of, people calling for maybe the market was a little bit overvalued here, a little bit overbought. Big institutions weren't throwing money in here anymore, and we started to correct a little bit. We got a bounce up to the 50 and got rejected from the 50 and then just hovered around here. This right here, from the top to where we started to rebound, was a month long. What we're in here so far is only about a week and a half in, maybe 2 weeks from here. So does it have to bounce literally tomorrow or this week? Not necessarily. But what I do notice here is we are really, the algorithms, whatever, traders are trying to keep this up over the 50 moving average because of, like we saw here before this bigger correction, it tried to hold it and then gapped down big below it. This is why we're not jumping in yet, or at least why I'm not recommending people to buy a dip yet. There's just, this to me does not seem ready yet to go in long, even though 4,500 has held up for 3 days in a row. We've come down to 4,500. We've bounced each time. What that means to me is if we break below 4,500, then we're going to see a bigger correction and possibly a much bigger correction. So 4,500 on the S&P 500 is literally key. That is a very key level. So I want to see if this is going to happen here. This purple line is where we started to see the bottom of the previous correction. This previous correction right here from the top to the bottom was about 5.5% of a decline, almost 6%. Right here from the bottom to the top right here is about 5.5%, just about. So these are just about the same pullbacks at this point, at the low. At 4,500, it was about the same pullback that we saw right here. So we need to just keep an eye on it, see if a bottom forms. Right here, you have 1, 2, 3, 4. You have about 5 days of a bottom setting in. So right here, we'll see if 4,500 holds. This is something that I'm going to really, keep an eye on this week. And, if it does hold and starts to form, new highs and higher highs and all that, well, then maybe it'll be a better time to get long. But right now I'm saying, remain patient and just keep an eye on the technicals. And there's a lot of fundamental stuff going on too with the Omicron variant and possible news coming out from, Pfizer, from vaccine makers that are going to tell us in the next week or so how effective the current vaccine is against Omicron. I think that's going to be a big catalyst in the stock market this week, possibly if the data comes out. So I expect still a lot of volatility. So be careful. If you're trading, there's going to be volatility. So this is the QQQ, a very, very long trend line. This is a very bullish, even though we've seen this pullback, we're still in a very bullish market for the tech. Right here up against the top end of this trend line, you can see very clearly that we've rejected every time. But what we are doing is we're bouncing off the 50 moving average on the QQQ. We'll see what happens, this week coming up. If we break the 50, then maybe we retest the bottom of this trend line, which is going to be at about, 368, 367 or so. So we'll just see, keep an eye on this. That's the QQQ. We went over the SPY already. SPX is the same as that. Let's take a look at the Dow Jones Industrial. This one, to me, has a better chance of holding up because of how much this has sold off so far and the stocks that are making up the Dow Jones. This is more of a value type of index. You'll have a lot of your, the stocks that hold better value, lower PEs, not crazy growth like the QQQ. So this one is bouncing off of a very long-term trend that goes back from the rebound from coronavirus. You have a bounce here after this correction, which is looking very similar to what we're seeing right now. Bounced here, and now we're sitting at a lot of support right here. You have the 200 moving average that it looks like we're, bouncing off of after closing below it. We closed above it and closed above it again for a second day in a row. We also are at this support level and the trend line. So the Dow Jones Industrial Average, this is definitely going to be on my watch. It is making higher lows. You can see here, a low here, a higher low here, and a higher low here. Not a lot of higher lows, but it is still holding up pretty good in the face of coronavirus and a new variant. I feel like that is held up pretty good considering this is, a lot of travel, a lot of the transports, the hotels, the airlines, the cruise lines. It has held up pretty decently. So we'll see where that one goes as far as this week goes. And let's see, what else did I have here? On Friday, we have the CPI. So this is the Consumer Price Index. It is an inflation gauge in the market, how much inflation the market's seeing from a consumer, basis. And this is the data, some of the last data that the Fed is going to use for their meeting that is December 14th and the 15th. So this is the last big key data, and that's going to be on Friday, that the Fed can use for monetary policy. And, obviously, I think the variant of Omicron is definitely going to be something that they have to watch out for, because if people aren't going out or traveling as much or going to restaurants as much because they're fearful, that's going to affect the next few months of, GDP, supply chain. It just is. So, if you're somebody that like to go out, every weekend for dinner, and all of a sudden you're like, you know what, let's just stay in right now. It's going to affect the economy. So we're definitely going to keep an eye on that. A couple of things. Now, I'm not going to, make a picks for the week, obviously, because I'm not ready yet to pull the trigger long on anything. And I'm not really big on shorting. So I'm going to show the XLF. This is the financial select sector right here. It's an ETF that follows all the financial stocks. We're in an uptrend right here. Since half of the year, the whole year we've also been in an uptrend, but this is a trend line here that we're seeing a bounce off of. If interest rates get risen next year, a lot of these banking stocks will start to be able to make more money. So if you're somebody that thinks the economy is going to still keep going strong, which I do think that the economy is going to keep going strong, and interest rates are going to get risen, that's going to be good for the banking stocks. So XLF is going to be on my watch list for something that is not going to crush you if the market goes down. Look at the moves here. You have a low of 37 and a high of just about 39. So 2 points here. That's all this has moved in the most volatile type of market that we've seen all week long. So this is why I'm trying to show some safe places to possibly park a little money, so you can still be involved here in the market. So that's XLF. Some of them, like PayPal, this one is trying to hold 180, like barely trying to hold 180. This is a clear level of support that has been seen back here multiple times. It was resistance and then support, and then it took off to 310, double topped at 310, and has so far sold off back to 180. If 180 breaks, you have a gap fill here to 128. So, this is something to keep on watch for either a market rebound or maybe some more buying in PayPal instead of all this selling. It's definitely trying to hold up. Maybe we get a reversal. If not, under 180, the next stop logically would be about 130 or so. So this one is going to be on my watch both ways for a reversal, because it is still a very good company, or we just see the bottom fall through. So that's PayPal. I mean, the RSI on this is already so low. I can't picture a drop to 130 and what that would look like. So I'm more into this one for a reversal. but we need the overall market also. So PayPal is still going to be on my list. Citibank, this to me is a pretty good buy here at support for the year. So basically, coming into the year, you can get this stock for the same price that we opened up in January. That is pretty good for a stock that pays a nice dividend. It makes a lot of money, and it is in the financial sector, which will see some nice returns once interest rates get going and the economy keeps going. So Citibank we have, PayPal, XLF. I think I'm going to leave it there. There's really not much else that I feel comfortable with as far as, putting together some kind of stocks, to add to watch lists. So, so far, that doesn't mean that I'm not going to have more next week. I want to see where the market goes. If we start to see this rebalancing, like we have seen, it's going to take a lot of those QQQ names and take them down really, really low. The valuations of those are just way too high if you're going to get interest rates risen and if you have more of a hawkish Fed. And that's what the big money is doing. They're selling those off and they're putting their money into other more secure things. So that's it, guys. I hope that you enjoyed it. It's a lot to take in, but hit the thumbs up for the video. If you have any questions, leave it down below. I answer every single comment. Thanks for watching. Take care, guys.